It is Richard. You're doing Ichimoku Cloud Chart market review of the E-minis, the S&P 500 E-mini futures contract. As we can see from the cloud, we're fighting hard to stay above the bottom end of the cloud on the daily Ichimoku cloud. It's critical for the futures to remain above this bottom end cloud chart support zone. Any price action below the cloud will turn the Ichimoku cloud bearish. And then you've got to look for potential downside risk targets as well, potential areas for a rebound. As we can see back in January, we had a very strong rebound from this cluster of support zones here at the bottom in the cloud, and I'll touch on the 4-hour in a minute. But the market's fighting hard to stay above this bottom end cloud chart support zone. If we stay above this zone, and price action above the cloud is ultimately bullish, so the rally should continue. But any price action below the cloud, then we'll start looking at these downside risk targets for potential rebound support. So 5,800 seems to be a major support zone, as well as this bottom end cloud support zone here, as well as these other downside risk targets to the market. So the downside risk targets, if price action slices through the bottom in the cloud, is 5.9 and then 5.864 around about there, and then these lows here that we can project and look at this bottom in cloud 5.820, and then this zone at 5.760 roughly there. These are the downside risk targets. If price action slices through the bottom end of the cloud, that confirms a bearish outlook on the futures contract, and then we activate these downside risk targets for potential rebound and support tests. From the upside point of view, as long as we remain above the top end of the cloud here, the rally's okay. And these old highs will be the upside resistance targets for the market to take out. It looks like it's kind of forming a base in and around this zone here. So we just need to get through February, and then we could, the seasonality as well that normally takes place in February, and then we need to see that rebound further, rebound for the rest of the year. But very, very critical for the market here, for the futures contract to stay above the bottom end of the cloud. Ichimoku cloud, we're already in bearish territory, and this cloud particularly highlights the downside risk between 5.960 and 5.940. So these lows can be retested quite easily because price action now is below the bottom in the cloud, so that's bearish. From an Ichimoku cloud chart perspective, ideally we'd like to see the price action above the top end of the cloud. So swing trade short-term relief rally could be back up to the bottom of the cloud. That's now a new resistance zone to deal with on the 4-hour. Downside risk targets is this cluster of support here at the bottom in the cloud, as well as these staged support zones. You can see the bottom in the cloud, they make out for good support zones. And then a ultimately downside risk target is this one here at the top end of the cloud, 5.938, and then the bottom in the cloud at 5.877. So these are two major support zones on the 4-hour Ichimoku cloud. So we are bearish there, so there's elevated downside risk on the futures contract on the 4-hour Ichimoku. If we take the hourly one, for the more shorter term kind of trades, you can see we're struggling to get past this resistance zone. Ideally, we'd want to see a breakout past the top end of the cloud here. So it looks like we're fighting for support here at the standard line of the Ichimoku cloud. It's also very close to the bottom end of the cloud here, where there's a support zone. So there's a possibility for swing trade back up to this resistance zone of 6,041 on the hour Ichimoku cloud. But price action is still below the cloud, so that is kind of bearish. And then there's elevated downside risk. The 5.991, 5.954, 5.938, these are all downside risk targets on the 60-minute chart. But it looks like we're fighting heavily for support there, so the potential for a swing trade back up to the top end of the cloud. And if it breaks through there, then we'll retest these old top end cloud chart resistance zones. But that's on the hourly one, very, very short term there. The 4-hour one really needs to improve there. If we look here, we need to see a rally on this standard line here back up to the bottom end of the Ichimoku cloud, but we are in bearish territory in the 4 hours. So that's elevated risk, that both bearish on 4-hour and 60 minutes, and our daily is at risk of turning bearish overall on the daily Ichimoku cloud. So we do need to see a stronger rebound. So this is potential cloud chart support rebound trade opportunities here with a very tight stop loss of twice the average true range. You can see the when the market tests this cloud chart support, we do sometimes get quite a few dips below that zone to test to see how strong this level of support is. But we can see these old highs now should come back as support, those lows should come back as support, those lows and this cluster of cloud chart support test there should also come back and test support. But we do need to get through February. As long as we stay above the bottom end of the cloud, the rally should okay, but watch out for any slice through there, and then for the price action to remain below the Ichimoku cloud. Until next time, happy cloud chart trading. Bye for